Hello class, welcome to the video. This video is your second video for your chapter 7 in your FA2. So in this video, we are going to practice one question for your cash flow, classroom exercise 7.1. So you can see that in this 7.1, you are given a set of income statement and also a statement of financial position for the year ended. And you have to take note, they are giving you 2 years information. On the left hand side is 2020 and on the right hand side is 2021. So basically 2020 is last year amount and 2021 is current year amount. And there are some additional information, we will go through it together. And what is the requirement? We have to prepare a cash flow statement for Hana Private Company for the financial year 31st December 2021. So let's look at the additional information first. The company has issued ordinary share at premium during the year. This is the first requirement. So when you're talking about issuance of share, this is more related to your financing activity, which is the third part in your cash flow statement. So we have to identify how much of the share or how much of the money we collect from the issuance of share. So let's have a look here. So the first adjustment is related to the issue of share. So we have 2 year amount, which is 2020 and 2021, and we have ordinary share together with share premium. For the ordinary share, 2020 information is 750, 0 for the share premium. At 2021, the ordinary share changed to 1000 and the share premium is 50. So last year is 750, this year is 1050. So tell me, your share capital increase or decrease after the share issue? The answer is increase, right? If your share capital increase, it means that you sell the share to your shareholder. And what is the consideration from the sale of share? You will get money. So how much you receive? So you will receive, we're using 1050 minus 750. So you get 350 from the sale of share. And this 350 is inflow, so we have to show positive amount later, and this amount is under financing activity. Next, the company has redeemed part of the debenture during the year. So you can see that debenture is under non-current liability. The debenture has been reduced from 1000 to 750. So we have to do a comparison. Let's use the presentation in this way. The second one is regarding the redemption of debenture. Redemption of debenture. So our debenture 2020 is 1000, 2021 becomes 750. What is the difference? We reduce, right? Our debenture reduced from 1000 to 750. When your debenture reduced, it means that you have paid the money to your debenture holder. It means that you have paid off the money. So when you pay money to them, how much you pay? You pay them 250. How you know 250? You use 1000 minus 750 to get 250. So for payment, this is an outflow of the cash flow of the company, and this information we have to show under financing activities. So we can note down in our textbook. So this is financing activity as well. Next information, one of the non-current asset which costs 180 and had a net book value of 20,000 was sold at 38,000. So this information is related to your non-current asset, so we can say that this is related to your investing activities. So what are the information for this? We have to draw few account to identify this, and this is the third one. Third one is regarding the non-current assets. So we have to draw few account. The first account that we have to draw is the cost account for the non-current asset. The second account that we have to draw is the accumulated depreciation. Because this is just your working, you are not required to draw a proper account. A working will do. So let's have a look. This is your non-current asset under your statement of financial position. You can see that the cost 2020-4180, 2021-5380. So what it means? It means that the last year closing balances will become this year opening balances. So for the cost, we know cost is under asset, right? So I cost the opening balances is on the debit 4180, and the closing is on the credit 5380. For the accumulated depreciation, it is opposite as compared to the cost. My opening balances is on the credit and my closing balances is on the debit. So I have a balance BD on the credit and then a balance CD on the debit. Amount 2240 as the opening balances and 2575 as the closing balances. So let's look at the additional information. It says that they sold one asset. What is the information of the selling? The cost of the disposed asset is 180,000, and the net book value of the disposed asset is 20. The company received, so we call sale proceeds. The company received 38,000 from the selling. So we know you have learned this in your financial accounting 1. When we have a disposal of the asset, we have to draw one additional account. So this additional account is known as disposal. So let's start from the first one, disposal. They say that the cost is 180,000, right? So we have to reverse the cost to the disposal account. So we write disposal on the credit. So on the debit, we write cost. In the disposal account, we write 180. So this is the double entry. Next, we have to reverse the accumulated depreciation. But the additional information here, we don't have any info regarding the accumulated depreciation. So what we need to do is we have to do a working. If you understand the concept in your property, plant and equipment well, you will know that the working for your NPV equals to cost minus accumulated depreciation. In this question, we have cost, we have NPV, we have cost 180, but we don't have the information of accumulated depreciation. So your accumulated depreciation will equals to 180 minus 20, which is 160. So now we have to record this 160 in our accumulated depreciation. So in this accumulated depreciation, we are going to write disposal on the debit 160,000. We debit the accumulated depreciation account and we credit to the disposal account. Accumulated depreciation 160. Next, we have to record the sale proceed from the asset. The sale proceed is 38. So we will write on the right hand side, we will write bank 38. So after that, we have to analyze our disposal account. We have to get the information whether we make a gain or loss on the disposal. So from here, we know the credit is 198. So the debit must be 198 as well. So the remaining balance amount, 18, is on the debit side. So what is this? This is gain on disposal or loss on disposal? The answer is this is gain on disposal. Why gain on disposal? Let's do an analysis. You spend 180 as the cost for buying the asset. You have used the benefit up to 160,000 and you can receive 38,000 from the selling. It means that you earn 18. Your cost is lower than accumulated depreciation plus the sale proceed. So this is a gain on disposal. So we have complete our disposal account. Next, we are going to complete our cost account. We know that what are the information that will appear in our cost account. We will record the selling, and similarly, we will record how much we purchased during the year. So your credit is how much? 5380 plus 180, you get 5560. So your debit must be 5560 as well. So you use 5560 minus 4180, so you get 1380. So this 1380 refer to your purchase of the non-current asset during the year. So this amount we are required to show in our cash flow statement under investing activity. Next, accumulated depreciation account. In the accumulated depreciation account, other than the opening and closing balances, we will record how much of the accumulated depreciation for the disposed asset, as well as what is the depreciation during the year. So can we find out what is the depreciation amount? So we tally the debit balance first. 2575 plus 160, so we get 2735. So on the debit side, the credit side will be 2735 as well. So the balancing amount will be 2735 minus 2240, so we get 495. And you may compare this amount to your income statement to see whether you have any depreciation information or not. Yes, you can see that from here our depreciation is 495, meaning that your accumulated depreciation account here is correct. So what are the information in your accumulated depreciation account have to show in the cash flow statement? The answer is your depreciation. Your depreciation have to show in your cash flow statement, and this depreciation is shown under operating activity under non-cash transaction. Next, we have a look on our disposal account. In this disposal account, we have again on disposal. This amount we have to show under our operating activity as what? As non-cash transaction. And for your disposal account, the receipt from the disposal of the asset, 38,000, this have to show in your investing activity as a collection. So basically we have complete the explanation of third additional information. Next, the last one, the company has made interim dividend payment during the financial year. So we know when you make dividend payment, this is related to your operating activity. But here the examiner silence on how much you paid as a dividend during the year. So we have to do some working to find out. So this is additional information number 4. Dividend paid. I hope that you recall the dividend payment in your chapter 4 or chapter 5. So we know that dividend payment is related to which account? Dividend payment is related to your retained earnings account, because we will use the profit in our retained earnings account to pay for the dividends. So we can do an analysis on the retained earnings account. So this is retained earnings. So if you understand the changes of equity, statement of changes in equity, well, you know that we have an asset 1st of January 2021, and we will have asset 31st December 2021. This is the opening, and this will be the closing. One is opening, one is closing. So let's key in the available information in the question. The retained earning opening 1001, closing 1495. So 1001, 1495. So what are the possible transactions in our retained earning? We know that we have to record the profit after tax during the year. Our profit after tax in this question is 620. So what is the missing information here? What are the possible transactions that we will show in the retained earning other than transfer between the reserve? Because this question we are silent on the transfer of reserve, right? So we assume don't have any transfer between the reserve. So the only available information in this retained earnings account will be the dividend payment. So let's see how much of the dividend that we are really paid during the year. So we use 1495 minus 1001 minus 620. So the missing information is 225 on a negative. 225 negative. So this 225 will be what? Our dividend payment. So this is an outflow of cash, and this amount we have to show in operating activities. So we have basically adjust all the additional information. But before we prepare our cash flow statement, there are another two things that you are required to adjust. These two things are your interest paid and also your tax paid. These two are of the information that you are required to do a working to find out. So what are the related account for this interest paid and tax paid? The related account will be your corporate taxation account and interest payable account. So let's prepare a simple interest payable account and corporate taxation account. So we start from the interest payable account. So our interest payable account will be like this. This interest payable account is under current liability, so that we know that the opening balances is on the credit because it's a liability, and the closing is on the debit. The brought down amount 50, the closing is 60. So in the interest payable account, what are the additional information that we will indicate? We will indicate the bank payment, what is the actual interest paid, and what is the interest expenses during the year. Because your interest expenses not necessarily equal to your interest payment. Interest expenses, we can get this information in our income statement, which is 35. So we write 35 here. So our credit will be 85, debit will be 85 as well. So by doing the analysis, we know that the missing information is 25. So This 25 will be our payment, interest paid. So the information that we are required to include in our cash flow statement will be the interest expenses. This is under operating activities, and this is a non-cash transaction, and this is under operating as well, and this is under interest paid. Next, similar to your interest paid account, we have to prepare or do a working to find out how much of the tax that we are actually paid. So we draw a simple T account, and this account is a corporate taxation account under current liability. So we write corporate taxation. Under your current liability. So our opening balances will be on the credit, the closing will be on the debit. So we indicate the amount. Opening is 170, closing is 240. So what are the information that will be appear in your corporate taxation account? We will have taxation, and we will have tax paid. So here, what is the tax during the year? 240. So we write 240 here, and then we can find what is the remaining balances. Here 410 and 410 on the debit, so the missing information will be 170. So it means that in the cash flow statement we have to record this 170, and this 170 will show in operating activities. And you may ask a question, sir, how about this taxation? Do we need to show in our cash flow statement? The answer is no. We are not required to show our taxation in the cash flow statement. Why? Let's look at the presentation. The presentation of cash flow statement starts from what? Profit or loss that is before tax. So since you have used the before tax amount as the starting, so you are not required to adjust the taxation anymore. This is the explanation. Right, so we have explained all the adjustment that we are required to do for the cash flow statement. So in the next video, I'm going to prepare a complete cash flow statement for you. So thanks for watching. If you have any question for this section, you can drop me an email or ask me in the RMS.